Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'll be your host for about the next 25-30 minutes here on Options Guide TV. Today is Friday, February 16th, and crypto's back, baby. Well, at least it seems that way. This week, one of the big headlines is that crypto went above $50,000, looking at a new recent high. And also we had Coinbase announce earnings last night, and their numbers have been excellent. They're pushing up towards their more recent high in the underlying stock. And more importantly, we actually looked at a paper trade in Coinbase. So there's a little bit to talk about it. As always on Options Guide TV, we don't choose, well, we do choose when we actually tape the show, but it's not always conducive to when we want to put a trade on. So we look at paper trades, and what we like to call them that because you might do them a little differently if you had the ability to choose when you were doing your trade. And so in coin, we probably would have put the trade on Thursday closer to the close, but we did it Wednesday at 11 o'clock. We got the direction right. In other words, we even made a little joke on Wednesday, or I should say I made a little joke. Let's flip a coin in Coinbase and decide which way they're going. But we wanted to lean to the bull side of things. And oh boy, did the bull side work out. So let's start by showing Coinbase. Let's pull up the TradeHawk software. And you'll see here that just ever since Coinbase has been back in the news, we did have a couple of brokerage firms like Robinhood came out with a good earnings report, and a lot of it was based off of the crypto and the crypto volumes. That usually when the cryptocurrencies start rocking and rolling, people definitely like to jump on the bandwagon. It is a bandwagon underlying in that it's almost like the Chiefs are going to the Super Bowl again. Now all of a sudden I'm a Chiefs fan. That's kind of the mentality that they have behind crypto. Now, as far as cryptocurrency is concerned, I have no opinion where it's going to go. It could go to 75,000 tomorrow, or it could go down to 25,000. I really don't have any idea exactly what is driving the price in crypto, especially when you talk about Bitcoin. The use cases, I have Bitcoin. I've never sold any of the Bitcoin. Not really sure how Bitcoin is supposed to be used. I know it's extremely liquid. I know that you can use it to rob people of money if you take over their computers. And a lot of people call it the crypto gold. They think of it as an asset to buy when there are troubled times in the economies across the globe. But besides that, it's just a real hard thing to judge. So we talked this week a lot about Coinbase. One of the things about Coinbase is it's not just Bitcoin. If the volumes are rocking in stable coins and a lot of different types of cryptos, not only cryptos, but just other securities, Coinbase benefits from that. And so I almost, in a weird way, and just kind of came up with this like an ETF for cryptos. There are a few of them out there. Obviously, you can buy some Bitcoin cryptos, but Coinbase kind of fits in that because they're making markets in all these cryptos. And as the volumes increase and the underlyings continue to go up, Coinbase usually shows better numbers. So I find it very interesting by looking at the chart that we popped all the way back up. Let's go as far back. Now, we're not back to their IPO price, which I guess we'll go back another few days. Let's go 1,100 days back. Let's see where that gets us. Oh, it went minutes. Got it. Here we go. Yeah, it's not going to do that many minutes. Okay, so yeah, that's about where it was. That's not their IPO, but it came back to that level. This is right about where the IPO was at. But if you look at the chart, it's not been a good run. You get a little tired if you were on a treadmill trying to climb up that tall peak. 1,370 for a high. That's about where they IPO'd at. Came all the way down, bounced and came all the way back up. Now we're all the way back down in the doldrums. It really did absolutely nothing considering the volatility of the crypto space. This stock just stayed within that range from 110. I guess the low end was down to 40. So I guess it was a fairly decent range on a percentage basis. And then we're all the way back up, popped up to the 190, all the way down. And then look at this strong move to the upside. And we're stopping right around here. So this is at a precipice. This is, I would expect it to close somewhere right around 187. If we can break through this level, it's definitely going to act as support. Here's the big gap after the earnings. And what did we do? Let's go in and look at our trade. It was a very simple trade, and we just put it together. We kind of just threw it together on a Wednesday and said, we want to be a little bullish on Coinbase. We want to take the implied volatility out of it. So let's just go in and do a 50-50 trade. So we used the February 16th expiration. They announced on a Thursday, and 1 day left to trade in the option contracts, which I always appreciate, especially if you're selling some premium, because that option contract that you're sold, all the implied volatility has to come out, and also you're going to have a huge rate of time decay because you have 1 day left. So it literally becomes a 50-50 bet when you're doing earnings, when they announce on a Thursday, and you literally have just Friday to trade them. Okay, so on our trade, we did the 155, 160. That means that we bought the 155, we sold the 160. We paid $2, and I like it right now. It's showing it's trading above the max, but I highly doubt that we're going to be able to do that. It's a 5-point wide. What I'm referencing is that it's a 5-point wide spread, and it's showing that the midpoint was 510. Right now it's 460. This is where you'd want to be, right around 490. You could try to get 495. I think it trades in nickels on the big options. Yeah, I think it does. Okay, so you could try to get 495 on that trade. And that would be the order that I would put in. I don't want to deal with exercise and assignment, but I would try to close it out right here, and you probably get a fill before the market closes. You're buying the 155 call, selling the 160. The stock was very close to 157 when we put the trade on. We paid $2.35 for it, and we had an opportunity to get out prior to the close. So I jumped in to x.com, formerly known as Twitter, and just tweeted out that if I had this position on Wednesday, if we did the paper trade on Wednesday and the market actually went up as strong as Coinbase did going into earnings, it was a very strong market. As a matter of fact, let me look in. When I took the snapshot of the trade, the underlying stock was at 165.85. 165.85. So we started at 157 and we went up to 165.85. That was a very strong move going into the earnings. And now we see that we're up another $25, another 13%. As a matter of fact, I think it was up even higher in the after hours. But there's an obvious point in the chart right in this range where it's going to probably struggle to get through. I wouldn't be surprised if it closed somewhere near this, but then again, the markets are what the markets are. But look at the huge gaps that we've had just ever since I think Robin's Hood announcement is really what kind of kicked this off, which was, I think, on the 7th. I'm not 100% sure. Okay, but anyways, look at the movement to the upside. This is going to be an area of resistance right here where this last high was at. Did fill that gap real quickly though. Interesting. Okay. So that was our trade. Now, so I went in and just to show you the difference on uh, what implied volatility can do to an option contract, to a long call spread like we entered. We put this trade on for $2.35 on Wednesday using live markets. That would have been a midpoint fill. And I think you would have been able to fill for close to there. Never a guarantee on a midpoint fill, though. So it was around $2.35. We entered Coinbase at, and then the stock ran up to 165. So it took a day to get there. They were about to announce. I went out on Twitter and said, if I had put on that trade, I wouldn't take the risk of the earnings announcement because we got basically a free dollar. But want to emphasize that we didn't get everything. And that's a big deal. And that has everything to do with the fact that as the earnings announcement approach, implied volatilities had skyrocketed. Right now, we're showing the implied volatility on the February 16th option contract at 177. Now, these numbers break down on the last day, but we still have the historical volatility is around 99. The implied right now has dropped off from somewhere around 167 to down around 87, 88, actually below the actual historical vol, just by looking at the numbers across the months. And with that said, we could have only closed this out at about $3.20. So we would have made $3.20, 65. We would have made less than $1. We would have made around 70 cents on that trade. So I still would have taken it off the table. There was no reason to take the risk of the earnings report after a big run up like that too, because that also scares you a little bit, the buy the rumor, sell the news scenario. So just being blunt about it, I would have taken that dollar that or 70 cents, I guess, according to my numbers on here. But I would have taken it and I would have ran and I would have closed out the trade. Now we only do one contracts here to be dependent on how many you would do, but we always do a 1-by-1 spread. And that would have been where we're at. So just wanted to be straightforward about that. And I did put that on using x.com. My handle's at Brian Overby. All right. So the other trade that we looked at this week was in the SPY. And what we did, this one wasn't an official paper trade. This was just a trade that we threw together, honestly. And we put it on Monday. And we were hoping that the market, the SPY, i.e. also the SPX, which is now at 5,026. They set a new all-time high on the close yesterday. And we're at 501.56 right now in the SPY. Sold the 498s and went down and bought the 494s. Interesting enough, the market came running all the way down on Tuesday and then bounced all the way back up, and it closed close to the 500 level, somewhere between the 500 and 499 level, and that trade would have paid out. Now, I would have also got out of that on Thursday. If the market came down precipitously like it did, and it didn't hold its ground at the 5,000 level, I would have closed out that trade on Tuesday. But if you stuck around, it actually did pay out on Wednesday. So one of the biggest things about option trading, and I think this really applies. I would say some of my best trades are my trades where I had a plan, I got out according to my plan, and because I didn't lose my shirt. So even though this week, the way I would have reacted to the market and to the trades would not, in hindsight, would not have been good. I still think it's really important to stick to your plan. and to have one to begin with, to know where you're going to adjust. Now, we did an short to put spread in the SPY with 2 days remaining to expiration. And that's mainly because we have daily options now. And so that would have been a real hard trade to just adjust. You got Monday, you got Tuesday, maybe you adjust on the open, and then you got the Wednesday trade. In that trade, I would pretty much assume that it's going to be an all or none scenario if I'm looking at doing that trade. But if you hung it out to the end, you got lucky. You played the hope game and it came back and it closed above the 498. That's not an issue. All right. So now we have broken through on the upside in the SPX. So let's bring that back up. And where I think I want to hang, and I'm kind of hoping that this will be the case. If we look at the next Friday's expiration, we're looking at the 23rd. So that would be February 23rd here. We have the weekend, and I normally would probably wait to Monday to do this type of trade, but I think I'm going to set it up today. I don't mind looking at it today. We're going to do a couple of weeks trade. So we have the 16th and we have the 23rd. We're going to go all the way out to March 1st, which is a Friday. So let me move down to here. And we're going to do an iron condor. We haven't done an iron condor in a while. We're going to look at about a 1 standard deviation move away. So if we look at the delta here, we're right around, we want to be by the 49.15 level. And we're going to sell that option contract. I'm going to let this go about a week. I might wait till Monday, but normally this is going to be the official paper trade. We're going to do an iron condor in the SPX with hoping that the marketplace can stay above the 5,000 level. And we're going to look to bring in, we're going to go wide. We're going to go at least 1 standard deviation out. And we're hoping to bring in a small credit on $500 worth of risk. Okay. So we're going to sell the 49.15 strike. That's around, where's that delta? That's right around 16. And then we're going to go, and in this instance, we're asking here. Yeah, we got 60 cents. We'll do it. So on the put side of things, because of the way the volatility skew kind of happens in the SPX option contracts, a lot of times it's hard to get that done for a nice net credit to the account. But 60 cents, we'll take it. Now we're going to go up to the call side. We're going to go 1 standard deviation move. In order to do that, just to confirm, we're going to be right around here between 15 and 17 delta. So we'll sell the 140 here. And we'll do this one. Let's do the 125. Let's keep it $5 because we don't have a 145. So we'll sell this and we'll buy that. And we'll be skewed a little bit to the downside, which I don't mind that in this market right now. So we're going to sell the 5,125 strike and buy the 5,130 strike. This is an iron condor. We're 5 points wide. We have $5 of risk. That is going to be our margin requirement that will be held out on our account. We're going to bring in $1.50. So we have $350 of risk. The maximum upside that we can make is $150 on this trade. And this is an iron condor. And this is going to be our paper trade for this week. So let's put this into the TradeHawk software, and we'll zoom in a little bit on this. I didn't want to do that. We'll zoom in a little bit on this, and here you go. And so this is basically where the underlying is at. We're going to be skewed a little bit to the downside. In other words, we're going to have more protection on the downside. We get hurt quicker on the upside just because it's a bigger move. And I feel, and I definitely have a feeling, especially in this market, that you're a little bit more nervous about the market going down To the downside, I think there's more risk than there is to the upside at this point in time because we've just hit all-time highs. It's going to be hard for the market to keep breaking through the all-time highs over and over again. So I don't mind being within this range. We're going out till March 1st. We got a couple of weeks in this trade. We'll probably be in the trade for 1 week. But now that we've set this up and we're 5 points wide, if the market moves in either direction next week, we can actually adjust this trade. So we're going to look at a iron condor. I think the timing is a little bit is right. We looked at a lot of skip strike butterflies on the way up to 5,000, anticipating that we would get there. And now we're going to chill and think that the marketplace is going to be a little bit more neutral. We still got a very wide range. So our range that we want it to stay in is from our short put spread, which is 49.15, and our short put, I should say, and our short call, which is 51.25. If we stay within that range, we're good. We brought in a smaller net credit, but we brought it on each side because you're doing an iron condor, and the brokerage firms know that the market can't go down and go up at the same time. You only have risk on one of the spreads, so the margin requirement is cut in half if you think about it, because you're doing a short put spread and a short call spread. Only one of the spreads can lose money. So because of that, that is going to be the margin requirement. And we also get to bring in 2 net credits for that account. And let's look at it. Now, if I'm doing the iron condor, I'd like to go further out in time. That allows me to adjust it. So doing a very short-term iron condor, like we did in the SPYs, where we just on a whim did a short put spread in the SPYs. One of the things about that is it's very hard to adjust. And that's kind of what I was addressing at the just a few minutes ago. But with an iron condor, if you go further out in time and the market does move against you, you can adjust the trade. And it's a lot easier to do that. Some people will do it as far as 40 days out. It's just a lot of premium in the SPX. I don't really feel like I need to go that far. So we're going to go to a couple of weeks and we're going to look at this iron condor and we're going to manage it. And that's going to be the paper trade for this week. So if we have any questions, feel free to put them in the chat box. And I guess we have a comment. All right. Oh, yeah. Okay. We have a few of them. From Patrick. We'll just say from PM. All right. Go ahead and throw that up there. Thank you, Patrick. Appreciate it. Wednesday discussion on the long straddle, short straddle, and iron condor also. Okay. So, well, we got the long straddle. Yeah. IWM is definitely an interesting trade too. I guess we can pull that up real quick. Let's see. We got a few minutes. But IWM is breaking out, and we talked about that long straddle as opposed to a long strangle, and it's just it's a real interesting underlying right now. And I had CNBC on for the rest of the day, and a lot of people were just talking about IWM. Our first trade that we did in IWM was all the way down at the bottom of this channel, right here. To me, was the first long straddle that we did. Right here, it is tempting to just buy a call. I mean, I do feel the path of least resistance is to the upside. But if it came back within the channel and it came back all the way back down to this low here or somewhere above that, and then went back up again, and it was the third time bumping up against this resistance level, then I'd want to get real bullish on it. But at this point in time, I think I'm surprised that the volatility is as low as it is on Coinbase. Let me pull up the trade real quick, and we'll look at that. Let me scroll down. And I was surprised that we were able to go out as far as we did. Let me look at this 1 second. My eyes aren't what they used to be. All right. So we did the 197.50 call and put, and the expiration date was March 1st, going out a couple of weeks in time. And our price was $7.40, and the vol was right around 20%. If you look at the actual volatility, yeah, let's pull up IWM. I wonder where the historical is around 20%. Yeah, we were paying basically what the historical was. 22% was the historical, and the implied vol on these option contracts was also 22%. So, like I think I mentioned on the show, was trading somewhere close to where Apple trades for volatility. So able to go all the way out to March 1st and pay $7.40 for the long straddle, as opposed to just paying, if you bought a long call, it would be $3.92. So it's fairly inexpensive in my mind. So I would rather do that long straddle at this point in time, just because the chart is still a little iffy in the IWM. All right. Thanks for the comments. Any other questions that we have? All right. That's going to be it for this week of Options Guide TV. We will be kicking off again this Monday at 11 a.m. Eastern time. Please join. We'll look at our Iron Condor. We still got some earnings trades. We still got the retail sales coming up. And we did actually have some consumer sentiment numbers that came out today. They were normal, for lack of a better word to say it. The market didn't really react huge over those numbers. And then we'll also look at a few trades around earnings. So might even jump into the paper trading portfolio and see how that is doing. So if you're in the Tradier YouTube website, please click subscribe, ring the bell. Make sure you share all this information with all your friends and family on x.com and however else you would like to share it. And we'll see you this Monday for the next edition of Options Guide TV. Thanks for coming, everyone.